And of course, they've had to do a mad scramble to make sure that they are not doing so much low deposit lending, 20%, less than that deposit, that they breach new rules set by the Reserve Bank effective from the 1st of November. Well, hi again, everybody. Over the past 6 months, fixed mortgage rates in New Zealand have increased at the fastest pace we've ever seen since they appeared first in New Zealand back in about 1991. Now, this is interesting because if you go back to 2004 into 2008, the last time we saw the Reserve Bank doing a sustained tightening of monetary policy to fight inflation, interest rates rose about 2% for the likes of the 3-year fixed mortgage rate over that entire period of time. Now we've got almost that increase in over just the past 6 months. What's the difference? The difference is mainly that back then there wasn't an expectation the Reserve Bank would have to do all that much to slow the economy down and get inflation under control. This time around, it's different. Inflation is already 4.9%. The unemployment rate is already 3.4%. Supply chain disruptions, rising construction costs, etc. The market's view is that there's a lot more work the Reserve Bank has to do, and rather than wait for them to increase the official cash rate, the markets essentially have already priced in most, but I suspect not all, of the monetary policy tightening the Reserve Bank is likely to do over the next couple of years. 6 or so months ago, the Reserve Bank thought they might only have to increase interest rates about 1.5% or so. Now they're looking at maybe 2.25% or so increase in their official cash rate. I think they could go a little bit higher. So when you look at where interest rates sit at the moment, I don't really think we're going to see too many big changes for the next few months, but I still think you could see up to maybe 1% be added to the 3 to 5 year fixed mortgage rates. And for the shorter terms, which are far more closely tied to where the official cash rate sits right now, maybe there's another 1.5 to 2% to go on board there. Now, the other thing I just wanted to quickly talk about is that I do a monthly survey with the REINZ. The latest results from real estate agents show that FOMO has fallen away pretty much back to where it was in April last year during the first nationwide lockdown. There's been a big pulling back of people from auctions and open homes, etc. And what's happening is that we've got a bit of a credit crunch in the economy at the moment. We have banks running through the Credit Contracts and Consumer Finance Act regulations, and so having to count a lot more expenses and a bit more dubious on people's income sources, etc. They're experimenting also with applying debt-to-income ratios, the DTIs, and of course they've had to do a mad scramble to make sure that they are not doing so much low deposit lending, 20%, less than that deposit, that they breach new rules set by the Reserve Bank effective from the 1st of November. Also, on top of that, of course, we've had this extremely rapid increase in mortgage interest rates out there. And also, a lot of people are simply tired. They're stressed out from attending auctions and not winning. They've been spending a lot of money on getting building assessments, etc. done. So I think as we saw a lesser version of last year, a lot of people, I think, are stepping back for a bit of a summer break, quite frankly. Now, where this heads, I think, is into a far slower pace of prices growth in New Zealand going forward. That's positive because for investors, it reduces the chances the government will take another anti-investor move from early next year. And for first home buyers, the key point to note is that we're going to see more listings come forward. That I'd suggest is an extremely positive development. So if you've been frustrated and not able to make a purchase for quite some time, I would suggest staying in the market because I don't have an expectation of prices falling on average. There's just too much good growth in the economy. But I do think the listings problem that you've been experiencing is going to be greatly alleviated over the next 3 to 6 months. All the best out there.